So in this video, I'm going to show you whether this stock market bull run can actually go on much longer in 2025, despite these completely absurd returns that we've already been seeing over the last couple of years. The stock market making a 60% gain within 2 years has only been seen a handful of times throughout history. Right here in 2021, in 2011, in 1996, and 1987. Now, in 3 out of these 4 instances, the stock market was actually pretty close to a big peak, each of these being approximately 20% declines in stocks. A 20% decline in the stock market today would take us approximately back to the high of late 2021. But these kinds of large market corrections don't just happen for no reason. They require a specific environment for them to happen. Otherwise, the market can just keep on going like it did in 1996, where no catalyst appeared, and so the stock market continued to move up all the way till 2000. So what's the difference between these episodes in 2021, in 2011, and 1987 that all saw large market corrections, and 1996 where stocks did not correct? And as always, I try to give you the most straightforward answer that I can. The answer to that question is inflation. This is what was happening to inflation in 2021, 2011, and 1987. In all of these examples, it jumped considerably from low levels to at least 4%. And very shortly after this happened, the stock market corrected. In 2011, you also had the European financial crisis that hit at the very same time that probably made that drop even more severe. Now, look at what happened to inflation in 1996. It went down. It continued to steadily decline right up until February of 1999, where it started to pick up considerably, eventually leading the market to peak and moving down. Higher levels of inflation directly translates into higher interest rates, which often leads to economic volatility or even economic recessions. Low levels of inflation usually means the very opposite of all those things. Over the last couple of years, inflation has been trending lower, and so naturally contributing to this melt up in the stock market that we've had. People have been calling for inflation to turn back up over the last couple of years, but to us, data still suggests that inflation is trending lower. The most recent data from the Cleveland Fed on the rent prices of new tenants suggests that these have been contracting for the first time since the financial crisis. If we overlay the official CPI rent inflation data, we see that the new tenant rent index predicts what the CPI rent data is going to do over the next 9 months. And by the way, that's one of the largest chunks of the inflation data, so suggesting that a big part of inflation is going to continue trending lower over the next 9 months. So low inflation is one of the reasons why we actually think this bull market can last at least in the first half of 2025. Now, don't be mistaken, the reason inflation is low is not because everything is fine with the economy. We happen to think that low inflation is actually a symptom of a diseased economy that is suffering from high levels of inequality. The US consumer today has a low level of confidence, a low level of personal savings, and pretty high debt burdens. So naturally, inflation stays low because people are just not able to afford higher prices without the government injecting trillions of dollars like they did right after COVID. But in the meantime, US corporate profit margins are hovering at the highest levels in history, currently representing 13% of GDP growth. So 13% of the entire US economy is just corporate profits. And all of that is naturally reinvested back into financial assets, pushing them to higher levels. So our strategy at Bravos Research is quite simple. As long as inflation stays low, we think financial assets can continue rising like they did throughout 2024. Now, in the short term, you may have seen from our recent videos that we've gotten a little bit more defensive, reducing our exposure to US stocks. But we've actually just sent a memo to our clients highlighting that the risks that we've been worried about in recent weeks seem to have dissipated, potentially clearing the path for the stock market to actually resume higher straight away. So we've initiated a few new long trades on US stocks that we think have some great potential upside in the coming weeks.